Welcome everyone. Today we come together with a shared vision and an exciting opportunity to tell you about. Our journey started with a collective passion for Barcelona, the determination to make a mark, and especially the courage to launch a business in these unique times. After the Christmas of 2022, we made a bold decision to open a new Montaditos franchise guided by a renowned Catalan chef. And the location, well, as you can see right behind me, it's nothing more spectacular, right by the sea, overlooking the beach and next to the iconic W Hotel, one of the city's most trendiest spots and iconic skyline pictures.
But that's not all. Alongside the Montaditos, we've been brewing an innovative concept of personal chill-outs designed to offer a safer and unforgettable experience for all the bar lovers out there. Our venture is more than just a business opportunity. It's a celebration of Barcelona's vibrant culture and a testament to our dedication to providing a fresh and exciting experience for our patrons. Together, we're on a mission to create something that reflects our love for Barcelona, our entrepreneurial spirit, and a commitment to making a difference in the world of dining and entertainment. Thank you for joining us today to explore an exciting investment opportunity. I'm thrilled to introduce you to the team that will be leading this venture. Let's start by meeting the key members of our team. Ludo is our Barcelona specialist. Valentin, our operations expert. Lucas, our financial guru. Alex, our marketing maestro. Carl, our legals and compliance specialist. And last but not least, myself, Maximo. And now that you've met our team, let's delve into the structure of our presentation. Our presentation will cover the following key topics: investment opportunity, company and environment overview, financial statements, and conclusions. We'll start with the investment opportunity. Our investment opportunity centers around launching a new Montaditos restaurant by the sea, adjacent to the W Hotel, offering a unique and safe chill-out concept that will cater to bar enthusiasts eagerly seeking a taste of our beautiful city. To realize this vision, we require a total capital investment of 450,000. This amount is distributed as follows: an initial payment of 130,000 in year 0 to secure the premises, a subsequent payment of 260,000 in year 1 to continue the development and launch of this restaurant. Additionally, there will be capital expenditure (CapEx) payments totaling 40,000, distributed over 2 years, 20,000 in year 2 and 20,000 in year 3. By year 4, no further capital expenditure will be necessary, with a focus on operational sustainability and growth. This investment structure ensures the successful launch and growth of our Montaditos restaurant venture. Now let's proceed to explore the broader aspects of our investment opportunity with a closer look at our company and environment overview.
Thank you, Maximo. Now let's move on to the company and environment overview. First of all, the industry is very vibrant, with many Montaditos restaurants already established and successful, which represent extremely accurately the city's dynamic culinary culture by providing cheap, tasty, and convenient dining experiences for all kinds of people, from young children to adults. We're pitching our new restaurant in a fantastic location, which will provide a competitive advantage over our competition. We decided to position ourselves right on the beach, next to the iconic W Hotel, and with the help of a Catalan chef, we want to make sure to be on top of the industry. Talking about competition, Barcelona offers a lot of dining options, especially for small-sized food. In fact, the Spain's restaurant scene is known for its diverse culinary tradition, such as the tradition of serving small, flavorful dishes known as tapas. Casual dining is thriving, and it is important to remember that environmental and sustainability issues are not neglected and are one of the main focuses of our business.
Thank you, Ludo, for your valuable insights on investment opportunity. I will now continue our investment pitch with a snapshot of the predicted balance sheet. At first, I want to explain the growth of gross net current assets, which is due to investments for the premises. Secondly, I want you to take a look at the financial needs, which we can identify that we are in need of investments for the first 2 operating years, as said, which is for the premises. However, after the second period, we can also observe that the company is able to meet its short-term obligations We derive this implication from the growing EBIT. Please keep in mind that the information for 2028 and 2029 are identical because the investment project is believed to be perpetual, which implies that we do not know when our project will end. Now, I want you to pay attention to the asset turnover ratio, which reflects the company's ability to use its assets successfully to generate sales and revenues. According to our market research, we can consider a ratio of 1.5 to be favorable for the project. As we can observe, the project has, from period 1, a ratio above 1.5. Furthermore, another metric we want to highlight is the net operating capital, which we predict to remain positive. The operating net working capital is reflecting the use of capital to generate cash in daily operations without having to rely on outside financing. As you can tell, it's always positive in all years. Thank you.
Thank you, Karl. Starting off with the main indicators in the income statement, we can see that the forecasted sales for our projects are 600,000 euros in the year 2025, with an increase of around 3% every year. This data is extracted from other Montaditos franchise restaurants by the same Catalan chef. Focusing on depreciation, our entire initial investment will be depreciated over 10 years, starting from year 225. Regarding the other relevant figures in the income statement, we provided some more important ratios to showcase how beneficial an investment in Montaditos would be. Starting off, according to our expected costs, the gross profit margin in year 225 is 68%, which increases by 1% in the first year and then stays at 70% for the next two. Regarding the net profit margin in 225, we are centered around 30% before tax and 21% after tax, with a small increase of a total of 1% in the following years. Moving on with more ratios and measures. Regarding the ROE, the high and promising numbers make us deduct that our company will consistently generate strong profits relative to the equity invested by its shareholders. This indicates efficient use of capital, sustainable profitability, and the potential for continued growth, making the company an attractive and financially stable investment. Furthermore, our high and consistent ROA, return on assets, projection suggests that our company is efficiently utilizing its assets to generate profits, indicating strong operational performance. This leads to increased shareholders' confidence and potential for sustainable growth. Moving on, we want to focus on more ratios and measures, which is why we want to present to you the ROCE, the return on capital employed on total net investment. In this case, we have to mention that we do expect growth in 2029. The ROCE has demonstrated a consistent upward trend over the past 4 years, signifying improved profitability and prudent capital allocation. This not only reflects the company's increasing efficiency in generating returns, but also instills confidence among investors in the effectiveness of its capital deployment. Last but not least, the ROS. The ROS is stable and relatively healthy, ranging from 20 to 22% approximately. This is a positive sign for the financial health and performance. A consistent ROS suggests that the company successfully manages operations and can convert revenues into profits and provide them consistently. This is an essential element for investors, rendering it an appealing investment opportunity for prospective stakeholders, perhaps including yourself.
Thank you, Valentin, for the analysis of the income statement. We now analyze the free cash flow to the firm. The free cash flow to the firm represents the cash available to all capital contributors after deducting operating expenses, taxes, and investments required to sustain or expand the business. It is a comprehensive measure of a company's financial health, indicating its capacity for investment, debt repayment, and distribution to both equity and debt holders. We now analyze the bar chart. From the bar chart, we can see that the free cash flow to the firm is negative in the first 2 years due to the need of outside financing. Secondly, we can see from the bar chart that the payback period of the project will begin between the second and the third period of the project.
Let's summarize our key performance indicators to highlight the opportunity we want to offer. First, our internal rate of return stands at an impressive 40.89%. What this means is that your investment in this project is not only financially viable, but exceptionally lucrative. You can anticipate an annual return of nearly 41%, which reflects not just strong profitability, but also an excellent risk-return profile. If we take a specific look at alternative investments, our rate of return is able to outperform the stock markets by far, as, for example, according to Forbes magazine, the average return only shifts of the stock market only shifts around 10%. Second, our net present value is positive around 199,000 euros. This figure speaks to the creation of substantial value for our investors. The positive net present value suggests that the present value of future cash flows from our restaurant surpasses the initial investments, which makes it a financially sound endeavor. Furthermore, we have a swift payback period of just around 2.5 years. This means that you as investors will recoup your initial investments relatively quickly, demonstrating the efficiency of our project in especially generating cash flows, leading to immense reduction of risk. Lastly, we additionally considered the modified internal rate of return, which stands at an attractive 28.76%. This metric provides an alternative perspective on our returns, considering reinvestment assumptions. Even though it is slightly lower than the initial internal rate of return, it still highlights an impressive return on investment. Montaditos is not just financially sound, but also offers the potential for substantial rewards. We want to capitalize the prime location of Barceloneta and create exceptional environment for visitors of all over the world. As you can see attached, we summarized the key takeaways for your notes, which might help you to evaluate your further decisions. Coming to the end of this presentation, I think there's just one thing left to say.
Who wants to join us on this incredible opportunity?